we will be able to create some basic safety and soundness, transparency and accountability, and consumer protections with this framework.
What we have in the U.S. is we have this concept that you have market regulators like the CFTC and SEC to help protect the public against fraud and manipulation in the markets.
Congress is closing in on the cryptocurrency industry. In recent months, there's been an increased focus on the regulation of cryptocurrencies. This is in response to the growing popularity of cryptocurrencies and the associated risks. Some believe that regulations would be beneficial, as they would provide greater clarity and certainty for investors. Others believe that regulations would stifle innovation and limit the potential of cryptocurrencies. In today's video, we will cover what Charles Hoskinson thinks of regulating cryptocurrencies. If you're new to my channel, don't forget to subscribe and hit that bell icon to always stay updated with the crypto world. Let's dive into the video.
The blockchain industry has grown over the past decade from a small group of uncommercialized volunteer developers, and it was very small, believe me, to a $1 trillion global economy encapsulating sophisticated engineering, scientific research, publicly traded companies, and millions of users. While our remarkable growth yields significant opportunities ranging from infrastructure security to entirely new economies like metaverses and NFTs, it also has presented new challenges and amplified the existing problems. Our legacy systems cannot handle the rapid movement of value without counterparty risk and require centralized middlemen. Our regulatory tools, risk management systems, and oversight processes were never designed for such speed, scale, and rapid evolution. The power of blockchain technology is its universality and permissionless model for innovation. Our company Input-Output has never had to pay a royalty, file a patent application, or acquire a license to pursue business in countries as diverse as Ethiopia to Mongolia. Thus, we have to understand that categories-based regulation that is segregated to the borders of a particular jurisdiction and relies upon centralized actors for reporting and disclosure is unlikely to be effective and frankly will inhibit regulation. Furthermore, the Internet's governance, evolution, and innovation aren't controlled by the ITU or some other transnational body, but rather by thousands of interconnected and interdependent agencies and private companies working towards the self-emerging common goals of increased connectivity, capacity, and utility. If we are to discuss how to regulate our industry, protect consumers, and align growth with the realities of modern society, then we ought to have the humility to admit innovation makes specifics difficult. We should focus on principles instead. Blockchains enable the liquidity of value, thought, and commerce at a scale and speed society has never enjoyed before. Instead of predicting the outcome of these new capabilities, we ought to decide on what risks we must guard against, what fundamental rights consumers should have, and how to use new tools for the greatest possible good.
In the recent Congress meeting, Hoskinson outlined the principles of blockchain technology, believing that it should lay the groundwork for the regulation of blockchain technology. He added that blockchain technology promoted innovation and focused on the principles. He further added that regulatory rule, risk management system, oversight processes were never designed for such speed, scale, and rapid evolution. But we cannot allow this to disable us. We have to build a new way to manage this pace of change, and regulations could be a great help in it. Hoskinson expressed his eagerness to collaborate with federal regulators on the creation of new rules in a statement made on June 23 and published on the IOHK website, saying that the blockchain industry's adherence to U.S. law and regulation must be a guiding value. How should certain cryptocurrencies be regulated? Should they be regulated as commodities or securities? Let me know what are your thoughts in the comments section below. And stay tuned as Hoskinson further talks about the importance of appropriate and responsible regulation for the crypto industry. And if you find this video informative, be sure to like and share. Let's hear him out.
You know, when you look at cryptocurrencies in general, I've always viewed them like financial stem cells. They're kind of more fundamental than a particular category like a currency or a commodity. And really, it depends on the markets they're traded on and the use and utility that they have. But at the end of the day, you have to ask yourself, what public policy considerations are you attempting to satisfy? Is it sanctions compliance? Is it consumer protection? Is it market stability? What we do as an industry is we're all about transparency. So it's kind of funny, we're talking and debating about disclosure regimes. There's no other financial asset in the world that really is as transparent as a cryptocurrency. Every transaction from the very beginning, for Bitcoin, for example, from January 3rd, 2009, is known. Every single one. The holdings of the founder are known because all of these things are publicly available to everybody. So it's more about, in my view, understandability and the tooling required to make this work on a global basis. So I don't think it would be wise to say, well, is it a security or a commodity, or fall into this temptation of who's the more permissive regulator or what is the regulatory arbitrage, but rather just take a step back and say, what things do we want to guard against? And we now have 13 years of history as an industry of, I think, 6 or 7 collapses, a whole bunch of interesting new things like NFTs that have always pushed the limit, and a global marketplace with more than 100 million people floating around that we can draw from, and we can look on a case-by-case basis and build a framework that makes sense. What's encouraging to me as an entrepreneur, briefly, is that there's a lot of great legislation that's been proposed recently, like the DCA, the FIA. There's executive orders that have come through that are trying to force clarity amongst the executive branch. So these things together create a global dialogue, and if we're clever about it, I think we can converge to a reasonable compromise that we as an industry can live with and continue to be competitive with.
According to him, crypto is more fundamental than a particular category, like currency or commodities. He explains by taking the example of Bitcoin. Here, there's a lot of transparency involved. Every holder from the very beginning is known to all because all things are publicly available to everybody. A lot of things have happened in the last decade of the crypto industry. A bunch of interesting things are happening right now. He believes in building a framework that makes appropriate sense to working in the crypto industry.
I am not a securities lawyer or an expert on regulations, so take it with a grain of salt. But I don't think it's a question of, as I mentioned before, who is more permissive or who's less restrictive. It's more of a question of efficacy. And when you look at commodities, commodities are intrinsically decentralized. So I grow hay on one of my farms, and I didn't have to ask permission. There's no central hay agency. We're not the Soviet Union. We don't regulate things that way. And then suddenly when I cut it and I sell it, it enters into a global marketplace. Now that marketplace has rules and principles and protections, and there's a retail component, people feed horses, and then there's certainly an industrial component. So if cryptocurrencies are truly decentralized and that actually is a real thing, then it does make sense to embed that into a framework that's designed for things that are intrinsically this way. And you have to look out for cartels, market manipulation. You have to look out for where global actors try to come in, like China or others, and take over a market like they're trying to do the lithium markets. But that's a very different type of notion than a security in that respect. So my view, the most effective thing that can be done over the next 12, 24 months is to have a really good notion of what is decentralization and what are the factors that produce that. And if it gets past a certain threshold, it makes a lot of natural sense to regulate things like a commodity as opposed to a security. And if they don't, well, then it's very obvious who has the disclosure requirement.
Hoskinson used case examples to represent the decentralized nature of blockchain and reach an agreement to apply a regulation that understands, responds to, and goes hand in hand with that nature. According to him, what needs to be done right now is to first have a good read on what decentralization is and what are the factors producing that. He agrees that it is only natural to regulate things like commodities, if the bill gets passed. But now, the next question is, how should the crypto industry be regulated? There are thousands of crypto in the industry. Which one should get regulated, and which one should not? If you're having those questions in mind, worry not, as I'll be attaching a link to my other video, where Hoskinson discusses the same, so be sure to have a look there. Also, let me know in the comments below if you believe regulations are good for the crypto industry, and be sure to subscribe to my channel for more videos on the crypto world and economy. I'll see you in my next video. Adios!